Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I hope you didn't miss me too much yesterday. I actually, you know what? I'm okay sitting down and spending the time on the channel and on the research and everything. I really think it needs to happen, but I missed some good action yesterday, man. Holy crap. And it kind of makes me a little bit nervous. To be honest, it makes me really nervous to trade. Okay, well, so first of all, my sources got all screwed up. Let's fix that. Nope, display 2. There we go. All right, so here's the chart. Okay, so E-mini, not so hot yesterday. It's not the biggest disaster in the world, but we are hitting like new local lows. Certainly not the worst as like, back when Ukraine got invaded, but we're certainly headed there. And the big story yesterday, look at that move in the treasuries, man. When you come over here onto like the 10-year yield, man, and you look at yesterday, it really like puts it in perspective. New highs for yields, big move, and really just kind of out of nowhere. I mean, we will get these big moves going into FOMC for sure, right? But and I was kind of suspecting that this week maybe we would see a little bit of a rise in rates, but man, not like that. Not like that. It was just crazy. It was just crazy, and I'm kind of a little bit unsure what to do here. They have clawed a lot of it back. So we might see, mean reversion for today and tomorrow. We'll see, but that was just quite a move. Now, overall, everywhere else, we're just kind of seeing like everything going down. It's sell all the things, and kind of the big drivers here. There's natural gas, gold, and silver not doing so well either with the higher rates, and Kappa not doing so good. And then you come over to cryptocurrencies. Cryptocurrencies have just been all over the place lately, but I think that after the FOMC and they start raising rates, we might see some more decisive moves in Bitcoin, I'm hoping. And here you can see the dollar actually still up relatively high. So when we look around at like what's going on, and the big thing that I kind of see going on that sticks out to me is that China is locking down because of COVID cases again, and markets in China just look really awful. Okay, like 2008 awful. Another thing that I think is happening in China is there's been this story, and I think it's kind of been flying under the radar just a little bit, just because I don't think that anybody really knows what's going on. I mean, it's kind of like, what the heck? But essentially, there is a story out there that Russia asked China for help, and China sounded positive about it. So I also think that markets are concerned that China could come and side with Russia, and that there would be economic consequences for China because of it. And so as a result, things aren't going very well in China, and that's why when you wake up, it's just like it just looks like a complete shit show, right? So there's that, and then of course I think that the markets are just not reacting very well to these higher rates and just a complete and utter bond rout. So that is the context that we find ourselves in today. Also, we do get some numbers here. In just a few seconds, we're going to get the PPI and New York Fed manufacturing numbers. So that could be a key driver for us today. Let's see what we get from the numbers here. Okay, well, the New York Fed manufacturing is not very good. It's a negative 11. And the US PPI It's actually a little slightly less than expected. What is the core? US core PPI. Whoa, spot 2. Spot 2. Well, I don't think that I want to just hit into that, but that could really help out. 11.5 maybe it could have done, but the liquidity in the micro 10 years here is actually not too bad. It's actually not too bad. I don't know. If I had hit into 11.5, I think I'd still be a little bit frustrated. Yeah, both. So both of the numbers that we got there, again, New York Fed manufacturing at a negative 11.8 versus an expected 6.1. So a contraction as opposed to slight growth that we were expecting. And then the PPI number was less than expected. So producer prices are the edges coming off a little bit on that, which is really good for the inflation is transitory theory here. It's really positive for those guys. So I'm seeing when I come into the markets, let me show you something here real quick. There's a pretty important thing to look at too. We'll come over to the CME group, their interest rate tools here. Dun, 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 dun. Fed Watch. Okay, so when we do Fed Watch and we look at the March meeting, of course, pretty much everybody knows that they're going to raise 1 basis point, and the 50 basis point scenario is kind of off the table. If we come into May, there is a bunch of people, well, it's about 50-50, saying that in May they'll do a double rate increase. They'll increase 50 basis points, okay? And then, as we go out, so if I just skip a bunch and I go to December, where are we going to be at the end of the year? And there's a pretty even distribution around 175 to 200, which would be 7 to 8 interest rate increases. So this is a lot more than what it was a week or two ago. I think some people really overtraded the Ukraine thing in terms of its impact on what its impact on interest rates would be. But now in the course of the week, it's completely flipped. So it went from I think that rates should be higher to think maybe rates have gone a little bit too far. And it's taken this huge swing in a week. So we're seeing just like some really extreme volatility. Another thing that we probably should take a look at, I'm just going to close that one. No, we're not going to come back to that one. Another thing that we really want to keep an eye on, if we come over to the 10-year here, is throughout this move down that we've had here in the treasuries, there's been a significant amount of steepening in the yield curve, the 2s and 10s. And here we are, not quite so much between the 10 and the 30, but definitely in the 2s. Okay, so there still seems to be, even though we're steepening, there still seems to be some people in the 30-year kind of betting on this like policy mistake kind of scenario, right? And you could kind of see them towards the end of the day yesterday, and then definitely here this morning, trying to flatten back out. Right. So we're not only are we just getting a lot of volatility, but there's definitely like two sides to this trade. So we've got to be really, really careful about picking sides here and becoming too wedded to it, because you could get some surprises here, right? It's likely to go really like overextend one way and then overextend the other way. So that's where we're at. Now, I haven't moved much from that 11 to spot 11.5. So let's just kind of keep an eye on it here. We might get some We might get some activity on the news. I have to say the News Squawk seems pretty chatty today. News Squawk New York Fed Manufacturing Survey. Longer delivery times, higher prices, and increases in employment are all expected in the months ahead, and capital spending plans remain firm. Okay, so even though the headline number was bad, they're saying that the tea leaves in the report sound pretty bullish, huh? I don't know. What's that? Jigsaw Trading just tweeted, the big rat needs to let the small rat win so he doesn't get bored while playing. Does this sound familiar? Yeah. But that's not going to convince anybody to want to trade. That's Well, that's not the point that he was trying to make. But they're talking about trade journaling, which is a very important thing to do. All right, how are we doing? Oh, you know what? We need to get okay. So we got 11 people watching. Thank you guys for watching. I haven't heard anybody talk yet, but that's okay. Listen, it's the beginning of the week. I wasn't here on Monday. I'm sure you're all getting yourself situated, or maybe you're in trades. Let's get on ShareVision here. I should really start that up, right? What am I doing here? I need to go to thumbnail. Okay. Maybe I should try giving it a better name today, right? How does one hear words in chat? What do you mean by that? No reserve preview. Oh, yeah, that's great stream. Oh, no. Well, that's the thing. Nobody was saying anything in chat, but there you go. I was just double checking that we were actually live. That's all. I know sometimes you guys are really focused, so. It's really funny how chat goes, because it'll be periods where like nobody says anything, and then there will be periods where everybody wants to say so much that like I can't get through it all. It's like, you gotta pace yourselves, guys. Come on. Okay, let's go to live studio here. Make sure that's come on. Come on. Let's have me going here. No, I don't think it did. I don't think it worked. I don't think it worked. Should just have auto start on it. Live studio. Come on. Well, Share Vision not really behaving properly this morning. I'm going to try it one more time. Biden shut down the Keystone Pipeline. Energy independence now is difficult to open up. Is that correct? I haven't heard. Well, I don't think that they have any intention of opening the pipeline back up, to my knowledge. It was certainly a poor decision to close the pipeline. I have to say, it sure is something else to try and watch the Democrats try to how do we say it, like try to talk their way out of the predicament that they've put themselves in, because everybody knows that Biden created, the spin is just crazy. Especially this whole thing that's like everybody's saying that the government created inflation and that's a lie, and it's like this is you're the way that you twist economics to try and get that is pretty crazy. And I've seen some relatively intelligent economists fall for some pretty ridiculous explanations as to how that sorts out. Like, you remember we were talking, what was it, last Friday? I think I'm giving up on Share Vision here. It does not want to get me into the live studio and so that I can start the stream there. And I don't think that it's actually running. So I am just gonna stop. Anyways, they do a lot of work convincing people that printing infinity trillion dollars has no consequences. Their careers depend on it. Yeah, it really is like, I mean, that's exactly what they say though, right? But it's just simple economics, guys. If like, you can't have it both ways. This is they're always trying to do this. They don't, when they make their spin, I don't think they realize, the other end of the system. It's like you can either come in and you can say, all right, we did a stimulus and the stimulus worked and it worked, but we supply didn't keep up. Sorry, no squawk started talking. We did our stimulus, supply didn't keep up, and so we got inflation. Or you can say we did our stimulus and it just didn't work, right? Like, that's what they're trying to say. They're saying it didn't create inflation, but then you're kind of, what you're saying is that your stimulus didn't do anything. But I think the reality is that the Biden stimulus, at least the one that they put in at the beginning of his term in particular, was a waste of money. Face reality, central banks have kept money cheap for political promises for too long, shutting down the planet like a bunch of morons ripped the mirage right off. Well, I mean, the thing is that stimulus does work, though. That's the thing. I think one of the difficulties with this whole, I don't know what we'll call it, this whole thing, is that both sides of the aisle believe something around fiscal and monetary policy that is wrong, right? Republicans think that economic stimulus is useless and will only ever lead to inflation, and they primarily think that it will lead to inflation because it increases the debt, right? And the debt does not necessarily lead to inflation. They're very intrinsically linked. They're related issues, but it is not the case that inflation is linearly equal to the amount of inflation that's out there. That's not the case at all. What causes inflation? When there are more dollars out there chasing after the same amount of goods, right? This is why I have to say the supply side economic guys really got it right. And Democrats come in and they have some ideas about supply side economics that are dead wrong too. They think that supply side economics is just trickle down economics by another name. And that is not the case, because they're not saying, hey, I mean, that's a little bit different from saying, hey, we need to give the rich people all of the money and then they'll spend it and then we'll get back to the regular folks. That's not what it's supply side economics is about at all. Supply side economics is saying that if you do monetary stimulus and it only goes to the buyers, then the supply side isn't going to keep up and you're not going to get anything out of it. You're just going to get inflation, which is exactly what happened. So what do you have to do? You have to do targeted stimulus that also stimulates the producers. In fact, you probably really want to go after the producers primarily because they will give more money to their employees and ultimately create demand as well. And so the supply side theory of things, I think, when applied properly, is a much more effective way of doing stimulus. But look at the way that the Democrats did it, because they have this really, frankly, a dogmatic view of how this works, where we can only give money to the end people, is right, and small businesses. You get what you got, right? We didn't build up our infrastructure at all. And then when this massive amount of demand came out, and that's the real untold story, right? Is that the amount of demand that the stimulus created, by almost every metric, by how much we're importing, by how much consumers are spending, it was higher than before the pandemic. And it was a very quick and astounding rise, right? Yeah, they created more demand. It's pretty crazy. Yeah, they shut down the planet, they shut down production of goods and services, and print trillions of dollars, and then you got inflation. Yeah. DC convoy well, yeah, but that's because they're all pushing this. It's an insurrection storyline, right? I mean, this recipe literally had no other outcome other than inflation. Yeah, unless you didn't think it was going to work in the first place, which you kind of have to wonder if that's what they thought was going to happen. Anyway, I think that we can move the camera a little bit over here. Let's see if I can. There we go. Still doesn't look quite right to me, but whatever. I think that I have it I don't have it quite in the same position. Now there is this other side of it, which I do think you're picking up on something that is missed a little bit, right? Like before, when we did the stimulus in 2008, it wasn't a popular thing. It wasn't popular bailing out the banks. And to my recollection, all of the stimulus programs that Obama did that frankly, for the most part, just kind of fizzled out and weren't very effective. Like cash for clunkers, that was it created a lot of business in the short term, but they basically just they just moved demand forward. They didn't actually create more demand in that instance, right? But I don't remember any of those policies being broadly popular among the American public, right? But then you had Donald Trump coming in, and I blame Donald Trump. I really do. Donald Trump, like, straight up said, I need to give people money to get reelected, and he just blatantly started handing out money to people. It's like really what happened, right? And then that was kind of popular. So then Biden turned around and he's like, well, I need to do that too. Like that's really the long and short of it is like why when Biden came into office did we so desperately need another stimulus bill given how well the economy was running up until, December of 2021. Why was a stimulus so absolutely necessary to them? And I really just don't see how it was. It seems to me that it was really more, let's pay off our cronies and the voters. Yeah. And it resulted in inflation. It wasn't necessary. It just wasn't necessary. But I tell you what, they sure are paying for it now, right? Like, I don't think that anybody believes them on this. They're kind of, um, I don't think that anybody is buying their spin on inflation. I think that everybody knows that the inflation is high because of what the government did. But you know what? Here's the good news: is that Congress has become deadlocked. All of the stimulus that we were putting into the economy has come out now, and we are actually now, in fact, tightening. A lot of the hot air was taken out of the markets last year with all of these meme stocks down like 50% and so on and so forth. Everybody was saying one of the things I find interesting, this I keep hearing a lot about Ray Dalio because he's got this new book about the changing world order. Well, here's the thing about Ray Dalio. He is very often right on some of these really big things, but he tends to be wrong in degree. So like he thinks that Mexico will default and it will be like a huge deal and bring down the global economy. And like he defaulted and it was a thing for like a day and then that was all there was to it, right? Well, I think that this is kind of like a similar situation, everybody kind of knows what's happening, but they're wrong in degrees, right? So everybody knew that there was an everything bubble, and they thought that when the everything bubble collapses, that's going to be the end all of everything. But kind of what happened was we just had a little mini collapse on one section, and maybe we're having another mini collapse in some other sections right now. And so far, it hasn't been the end of the world, and it doesn't necessarily have to be the end of the world, right? But it puts us in a really difficult situation. And this just kind of comes back to today's plan. Well, we had some pretty bad news that should have the tendency to move rates lower, but I'm not seeing them move too much. What are the next slate of orders going to come in at? Especially since we're pretty confident that the Federal Reserve is going to raise rates tomorrow, right? Where does that put us? Because when I start looking at the longer term picture, I keep seeing low growth. Like the market is concerned about stagflation. I think that you're going to get a bit of stagflation this year, but it does look like the inflationary pressures are starting to subside. So I think that, by the end of 2023, we could be back to very low inflation and very low growth again, right? And the big question then is just like, at what rate do we top off at? Hopefully, I would say 2% would be a good spot. Get the rates back up to 2% and then just leave them there for a while. But then it could be low growth then, which isn't a very doesn't feel very good to think about, does it? Like I'm really concerned about a situation where you get a lost decade in index funds. Work for Solomon Brothers. I heard that coming. Why would I work for them? I haven't heard anything about them. I don't know anything about them. Well, they were pretty big on the bonds and stuff, weren't they? Let's see if I search for news. Oh, Solomon Brothers alumni rally for a historic encore. Solomon Encore is thrilled to welcome 3 top Wall Street banking pros to its advisory board. All 3 are alumni of Solomon Brothers, who each spent decades at the legendary firm. Oh, it does sound like they trying to come back. Full service investment bank. Well, that could be interesting. Oh, I am not the one that should be running the Fed. No, sir. No, sir. Listen, I think I'm pretty smart. I do. But I am not qualified to run the Federal Reserve policy. And to be frank with you, well, if I was running the Federal Reserve, I'm not too sure that things would be all too different. I do think that I would have raised rates quicker, but what I probably would have done is I would have or do we say I would have telegraphed rate tightening at Jackson Hole, would have, started the runoff in August and had it done by, before the winter came, and maybe we would have already had a interest rate increase in January or December. So is giving yourselves 3 to 6 months, is that really that does it really make that big of a difference? Well, it could make a big difference, but it's really impossible for us to know because there's no way for us to go through like multiple histories, right? Would love to see you stream from a live desk. Hold on. It would be interesting to see me on a Wall Street desk, but I'm not entirely confident that trading on like a traditional Wall Street desk that I would necessarily be good at it. Because a lot of what those traders do, right? The people that are still there that are trading, a lot of that is like over the counter and talking to people on the phone and stuff. And I don't know if I would necessarily be good at that. Something that I really struggle with is like if somebody is giving me directions, I have to like verify like 3 different ways that I understand correctly what they're asking. And even then I might have a hard time remembering all of the details of it, which I think could be a problem if I was doing over the counter trading, you know what I mean? So I would love to do block order trading. That's what I think. That's kind of like I talked to the block order traders. That's what I wanted to do. All of the research that I did is kind of towards things that the block order traders would be using. I don't know. I think that my place is probably more right where I am right now in terms of commentary, because I don't think that there are very many people in the retail trading space kind of like the that are accessible, right? There's lots of people out there that understand bonds and comment on it. But in terms of people that are really engaged in the community, have a YouTube channel you can come in and talk to and argue with and try to understand what's going on right now, I'm the only game in town, man. And, and frankly, some of these people that I do see out there talking about interest rates are just total charlatans, man. Oh my gosh. There's some people that really nausea. I'm not going to give names, but man, there's some people that this whole time they've been like, the Federal Reserve isn't going to raise rates. The Federal Reserve isn't going to stop asset purchases, all of these sorts of things. And they've just been dead wrong this whole time. And now they're coming out and they're like, yep. And now the Federal Reserve has made a mistake. And it's just like, why should I listen to you? You were wrong. The whole rise in rates that we've seen from, well, really starting from October, but then especially accelerating in January, you guys all told us that wasn't going to happen. And now that the Federal Reserve is raising interest rates, you're trying to tell us that you were right and that you know what's going to happen next? Get out of here. Get out of here. Right? And the more that some of these people talk, the more that I see that it's just, they just don't like the Federal Reserve. And whatever it is that they're saying at the time is basically just aligned with that whatever the Federal Reserve is doing is a mistake, which is really quite a silly way of approaching things. You know, it's not a very, I don't think it's a very smart way to go about making money. I'll tell you that much, right? And I think some of these people like are running funds and stuff. I wonder how their funds are actually doing, because I wouldn't expect them to be actually doing all that well given some of the things that they've said, but who knows? Maybe what they say and what they actually do are two completely different things. But no, the what I know is just this teeny tiny little sliver of things, right? I'm constantly humbled by how much I know I need to learn and dive more into, and how little time and energy I actually have to pursue them. You know, yesterday I had my study session, spent most of the time writing a script, and it's not even like a super complicated video or anything. It shouldn't take me 2 hours to write a script, but that it is what it is. But you know what? In the end, I think I got a pretty good script. I think the next video will be pretty good. I'm happy with how it turned out. But you know, right now I'm diving into machine learning. I really wish that I already had the experience in machine learning. I think that I kind of need to brush up on my Python and stuff a bit more. I think I've gotten pretty good with Python the past few weeks because I've been working with it at work and stuff. But I think that I would like to go to like LeetCode, spend more time on LeetCode doing some exercises there in Python. You know, it's these sorts of things. I really want to spend, so that's like the big effort right now is statistics, machine learning. But then there's also all sorts of stuff about modeling treasuries that I want to learn, and that I want to kind of get into coding those sorts of things. I want to learn Mandarin Chinese. You know, it's just like this big laundry list of things. Like if I ever got to the point where the YouTube channel was making enough money that I could just focus on the YouTube channel, I would have plenty of stuff to do, and I would probably still be unhappy with the amount of time that I had to do it. I think is the reality, right? And now you're saying I should run the Federal Reserve, so now I've got to learn everything about modeling the economy and the models that, you know, programming out the models that the Federal Reserve does. And I mean, I don't know any of that stuff. What I know is the economic numbers. What I'm truly an expert in here with you guys is what moves the treasury markets. What do the economic numbers mean? What is the current trajectory of the Federal Reserve, right? What are all of the correlations between that? The things that are directly relevant to trading, right? There's a lot that I don't know. Mandarin, you see China. I don't see China taking over the USA. I'm a little concerned by some of the things I've seen this last week. So, if you guys kind of missed it in the intro, China is not looking so hot right now. It's not looking so hot right now. The market in China is not looking so hot right now. And there's kind of two things going on that I think are scaring Chinese investors. The first is that they are locking down and they're having another resurgence in the virus. So because China was able to, how do I put this? It's kind of like what we said at the beginning, that if you completely lock down and you actually crush the virus, you're just setting yourselves up for bigger pandemics later on down the line, whereas the people that get it over with quickly are going to be able to get back to real life faster. Yeah, a lot of people are going to die, but I mean, that's what's happening, is that in the Western world, we're pretty much over the coronavirus pandemic, because even though I think that we'll probably have further waves, they're probably not going to be given the same amount of attention, because one, people are just kind of already over it and bored of it, but two, you don't get the accompanying rise in deaths because the vaccine worked and there's wide scale immunity to it as well. In China, you don't have that. Their vaccine didn't work and they don't have widespread immunity. And so when they have a breakout, it's a big deal. And then they shut things down, and that's hurting their economy. But then the other thing that's going on is that Russia has asked for China's help in attacking Ukraine. And so far, it sounds like China is kind of thinking about doing it. And basically what's happening right now is the US and NATO know what's going on and are calling them out. And of course, China and Russia deny it. But if Western intelligence is saying stuff like that, given their track record on this particular issue and everything related to Ukraine, I'm prone to believe them. And so it's really concerning to me that the Chinese are actually seriously thinking about helping the Russians in this case. And the thing that the thing that China said that in particular like really stands out to me is like, what? Wait, what? Was they said that China has a right to defend its legitimate interests. It's like, what interests do you have in Ukraine? We've had another little bit of a rise. I didn't like the original trade when we're at 11.5, but we did get $10 out of it. I'm not too sure how far back up we can come today. My son has been in my room and has kind of messed my monitors up a little bit, so I'm a little off. We're kind of like at overnight highs at the moment, so we're kind of coming into some levels. I'm not seeing any kind of weird, let's scroll up here a little bit. Yeah, the liquidity above us isn't looking too strong. In fact, the liquidity that we have, it looks pretty random, and it's still pretty weak with, only 1,400 being put on the DOM, so very weak liquidity still. Anyways, so is China going to help Russia and then the West respond by sanctioning China? That's going to be a real problem. So let me tell you, here's what's really going on. We're talking about Ray Dalio, the changing world order and so on and so forth. Well, he has kind of an interesting theory, but I'm not too sure if the things that he's saying are particularly pertinent to what I see as the changing world order right now. And what do I see as the changing world order right now? The globalists lost is what I'm seeing. It's really interesting. It's like globalism is going away in spite of Donald Trump. Like the whole thing was Donald Trump was in there because a lot of people didn't like a globalism, and what he was pushing was anti-globalism, and the establishment fought him very, very hard on it, and then he lost, and everybody kind of thought, okay, well, now the globalists are going to just take over everything. But what happened instead was that the geopolitical happenings went in such a way that countries, the countries themselves realized that they were vulnerable to globalist risks, essentially, right? And so during the pandemic, and then especially after the Ukraine thing, and if China gets involved, then it will really, really accelerate. But what we're seeing is we're seeing localization. We're seeing supply chains trying to limit their risk by localizing themselves, and every country trying to have a part of the supply chain in there so that they're not just completely screwed over. You gonna see it? Can you imagine if there are, man, if China does get involved and the West starts sanctioning China, like things could get really crazy really quick, especially with the whole like rare earth minerals thing and stuff like that. So the US has rare earth minerals, but we don't mine them. There's a lot of roadblocks to doing it. It's a pretty good slip higher, but the book seems very slippery. The liquidity is just not very good, is it? We might be getting a liquidity hole here at 09, but the book is so weak that it would probably be really easy for them to make another push higher. I think that if we wanted to make a trade, we could wait for a pullback. I don't know if we'll get the pullback, and the pullback might be a lot deeper than we anticipate too. See a pop in the 10-year, and yeah. The volume that you're actually seeing come through here is not all that strong. The news squawk is just talking about how Biden says he is going to run again. The volume and like the pace of the tape and everything is really tame compared to the degree of the move over here, right? It's moving because liquidity is very, very light. 11.5 would have been a good trade. It would have been a good trade, but that doesn't help me if I want to take another trade here. The timing is all wrong too. Interestingly enough, the 30-year side of the curve is steepening here with all of this. So, yeah, you're not getting much of a pullback though, are you? Anyways, so I don't see China overtaking the United States, but what I do see is that China has a lot of people. And there's a lot of really interesting things about China. And Mandarin is a really interesting language too. And it's an interesting language to learn. It's a lot of memorization. Yeah, I wish I could spend more time on it. Wish I spent more time on it. You know what I spend my time on now, my free time on? Training the dog. The doggy is such a smart dog. I've got him. I mean, so apparently you don't normally start to formally train a dog until they're like 6 months old. He's only like 10 weeks old, I think. If that. I'm training him. He can sit, lay down, jump, come. I'm trying to get him to roll over, but rollovers is being a hard one for some reason. Man, see, look, they're pushing again, not even a pullback on this one. Francois Holland, I've never heard of that. Him. Is that a different country? Yeah, step back. Is a French. Oh, okay. In France. I don't know why. Why do you bring that up? Anyways, I hope that someday the Chinese markets are more open to us and we could trade Chinese bond, and then yeah, I would love to be able to understand Chinese and do that. Would love to go and visit China someday. I think that maybe I will go and visit the people in Taiwan at some point. See, like the pressure is really coming from the 5-year. The moment it's kind of, so let's line them up here, right? You can kind of see the 5-year wanting to push for that big order at 24. And maybe they do go through that. Wow. And the 30 is pushing too. Like I was thinking, well, maybe we could do 10. Already missed your opportunity at 10. So kind of my problem right now is that there's the volatility is making me be more conservative, and I'm just getting a lot of FOMO here, right? I've kind of have the general picture correct. I really don't want to get into a trade here and to pick a poor price. So I really just need to be patient, and we should realize that I might not be able to get a good trade in here. And it may be better for me to just kind of, watch it and not really get too involved until after the Federal Reserve meeting anyways. Want to thank you for the way you educate. You're a good YouTuber. Thank you so much, Zach. For Cash, that's an interesting name. Yeah. I'm trying hard. I'm really proud of the content that I have on here, especially the order flow series. I mean, really, I think I've got a good set of resource for you guys to understand what's going on. I find it hard because I feel like that you have to watch like the full slate of stuff, because people make assumptions about what you're going to say or what you're teaching or whatever just by, okay, well, you're teaching day trading. Well, this is what day trading is like. And my approach to day trading is, a lot of it is all these things that people tell you is nonsense, right? Seth keeps dead air to a minimum. I try. I try. It's coming back there pretty hard now on that one after they slammed into that 24. They might give us a little bit better of a pullback here. Do it, don't think too much, both sides. Wait, you mean in terms of taking a trade? No, I'm gonna wait for a good price. I'm gonna wait for a good setup. Thing we gotta realize is that for all we know, that was all there was to it. Like the issue that we have with this action is that it doesn't take very much, right? On a normal day, we could come in and we could take a trade, and if we're wrong, they're probably going to give us plenty of time to figure out what's going on and bail on it. In this market, the liquidity is so light and the volatility is so high that if you take a loss, it could very easily be like a $30 loss just like that, right? So I think it really behooves us, and especially since we have a Federal Reserve meeting tomorrow, and then the aftermath of all of that, it's probably going to continue to be volatile. So the worst thing that we can do is come in and blow our whole load, just trying to chase it, right? We want to be tactical about it, or not tactical. We want to be strategic about it. We want to select the best trades. Well, 2.1 would maybe be acceptable, but I'm seeing some pretty decent sell orders come through here. So I don't think I want that one. Let's see what they do. They've kind of held that 09 a couple of times despite some big volume. There's a pretty big offer at 09.5. I'd have to say somebody fairly large selling here. Maybe profit taking. Anyways, I think that I need to make another video. So the next video I'm going to do is going to be monitors. I think the next one that I'm going to do after that is how much do you need to trade? Then I think that I need to make another intro video. And that intro video will be like, how do you get started at trading futures? But then also, I think that it also needs to be a little bit more about like the larger general overall approach. You know, to try and make that more of an entry pathway so that the new traders know more about what we're about. Because sometimes I feel like I spend more time trying to explain to people this isn't the same as what you hear you know trading gurus say, because we understand things about the market that suggests that you can't just come and see some pattern. The market is really good at arbitraging those things, right? Man, that comes. So the 30-year is really pushing there. I think I made a mistake in reading that a little bit because the 10-year came back a lot more than the 30, and that's why the best we got was 2.1. I'm not even sure if I would have gotten filled at 2.1. Left hash. I've been part of the interest rate trading community for 20 plus years. I've never heard of this guy, but 20 years is a long time. These markets are the most challenging I've been through. Worse than Bears collapse, Lehman, CDS's, MBS's, ZERP, EDF, etc. There's a disconnect from news in a way that I still don't understand. Yeah, see, staying involved. The liquidity is really nasty. The interest rate market has been seeing, well, yesterday saw like a really bad rout. The interest rate market is under severe strain. And that kind of creates a situation where you can very easily blow an account, right? Let's read this guy. Okay, this guy does sound like he might be worth following. Let's see if Patrick Rooney is following him. He retraded him. I have never traded a CL contract. However, the run-up and subsequent sell-off have looked surprisingly orderly, one-way directional, but no bottom just vanished. I can't even market or sell moments or those epic face rippers to the upside. What am I feeling? You see, that was 40 minutes ago. And this guy does talk. I won't add him to the list, but I will follow him. Okay, so we're getting a further push. I'm still seeing a little bit mixed volume in the 10-year at least. So it kind of suggesting that they are indeed in a liquidity hole in the 10-year at least and are having trouble kind of digging them out. And we'll see if they just get yanked out of it by the 30 or not. But if that's the situation, that kind of suggests to me I don't want to take a trade right now, especially the S&P 500 opening in 5 minutes. Right? I tell you what, this has been another thing on my mind lately. So somebody asked me the other day, they're like, do you take live trades on stream? I was like, well, sometimes I do, but I've been really conservative lately. And I'm just realizing a lot of people, what they want to see you do is put a trade on. They want to go, okay, how good is this guy really? Should I follow it, like mirror his trades and things? Don't mirror my trades. It's probably not a good idea. No, I think kind of one of the things that I'm trying to get across to you guys here is that I don't always make money, and the things that I'm sharing with you are things that like I can prove are, and I'm not I can't prove that it's going to make you money. I can just prove that they're true things and that the market really behaves that way, and it's up to you to make money from it, right? And probably a lot of you are going to do better than me. There are definitely some better traders than myself here in chat for sure. Okay. That is a decent amount of volume at 10. They're able to make it go, well, okay. It was a pretty strong uptick there, but it backed off on it a little bit. The 5-year ticked down at the same time. So this is like a really big mess. But they are, okay, they slip further. Yeah, this is just going to be one of those ones where you just miss the whole move. I'm not. So at 10, I was kind of thought that might be an okay trade, but I might get a better price and I don't know if I really want to enter there. At 9, I'm like, I don't know how much further it can go. Like at 09, I'm sitting here thinking if I had been short to begin with where I would have liked to have, I would maybe be thinking about getting out. Is there any indicator that measures correlations? Well, NinjaTrader comes with a tool that will show you the correlation between two instruments. I have to say that talking about correlations statistically is a much more complicated subject than you might expect, right? And especially when you're talking about the kind of correlations that I will see, because what I will see is like, okay, we had a move that appeared to be significant to me in the instrument that we just had, right? Okay, so like that last leg up after 10, that was a fairly significant take by the sellers, right? Or sorry, by the buyers. It would be hard to algorithmically identify that simply because like the volume and the liquidity is so low. But it was a pretty significant move. What was correlated with it? Well, I don't really see anything else move off of it. I didn't really see anything else move off of it. The 6J is going down, but nah, I'm not really. The only thing that does seem to be correlated here is gold, which I'm not super interested in about because gold is moving because the interest rate doesn't tell me much about the larger system, unfortunately, at this moment. Wow, 27.12 at 11? So that kind of starts to look like somebody really strong passively buying, and that's the kind of action that often leads to them finishing. $4K downtick, 5-year downticks twice, 30-year not coming back yet, flattening coming in. So anyways, like when you do correlations, it's really hard for you to come in and say, well, for this little move that was like a 1 minute long, it was correlated, right? Normally when you're looking at a correlation, you want a much bigger set of data than that to find, a statistical, something that's larger than error. So I think NinjaTrader does have like an FX correlation matrix sort of a thing. They really need to get one for assets in general though, or they need to make it more flexible. But like I said, it can become a complicated subject because then we got to talk about co-integration and the mathematical models and matrix math that they use to come up with those sorts of things. Lead us into treasury battle. Well, I wouldn't be. Well, actually, I take that back. I was about to say I wouldn't be fighting this trend, but I can totally see where you might be able to work out a thesis that interest rates will rise back up, you know? The thing that I want to point out to you guys again here is that that looked like a real the chart is going to be very deceptive to you here, right? That looked like a monster move, but volume wise it wasn't that significant. Volume wise it wasn't that significant. It was only a few thousand contracts. So you know, could somebody use this to try and go long interest rates again? Yeah, they totally could. And I mean, if you had gone long down in here, you already have $5, in fact. So look at that E-mini go here. A strong push, bull push on the open. Who was it earlier that was said they went long? Yes, they're probably pretty. Oh yeah, it was LAFTA. Yeah, you're probably pretty happy right now, right? Although I don't know, you might get a little bit of a heavy pullback in the ES on that one. Well, I don't know. 4,200 is kind of a key spot, so it might be a little bit different action here. Treasuries do appear to be pulling back, and you're getting a much more reasonable pullback on this one. You say it's not moving? No, we were like when we started, it was at 4170, and there's been a 10-point jump on the open. Maybe you do have the wrong contract. Are you on June? You should be on June for everything now. Yeah, looks like they're going to come back to my 10 here. So question, with that pullback, you still want it? Because I'm not so sure anymore. The liquidity still really concerns me. I think M is March. Let's see here. I always forget the codes. I'm pretty sure that that's not March because March is H. Yeah, you're on June. Sorry, June. Yeah. Yeah, M22 is correct. M22 is correct. All right, now so let me come in here. Oh, you know what? I need to. Okay. Man, the 2-year is apparently having a lot of activity today, by the way. Yeah, the bonds, like on a relative volume basis, there's a lot of interest in the treasuries today. Oh, someone's silver. Silver not doing so well. RTY is okay. So where's NQ? There's ES. Oh, there's NQ. NQ is a little bit higher there. We can net change on this session here for NQ is 1%. That's pretty decent, considering that like we're just opening up, right? Like if the S&P 500 has another 1% up move, that would be really significant for them. Oh, it was your VPN. I gotcha. That sucks, man. Yeah, so the pullback in the 5 year is really deep. Okay, so what I'm seeing now, okay, when we were at 0909 half, we were saying there's a pretty big, I shouldn't say pretty big, but there was a liquidity hole there, right? Then we pushed up further. I wasn't really paying too much attention to this as it developed, but we saw a lot of volume at 10 and then they came back. Okay, so we're now at the bottom end of that liquidity hole again. So right, it did this. If I can draw you a picture to explain why did it move the way that it did. I can find my pen here. It's hiding. It's hiding. Oh, there you are. Okay. We had to move up, then the liquidity hole, and then further move up, and now back to the liquidity hole. But we came to the bottom of that liquidity hole so easily. And the volume in the 30-year in particular is like really flipping around that I'm not so sure that I really want to buy that dip. This does not look to me what I would, this does not look to me like it pullback based on like post meta order impact. This looks to me like another meta order going the other way. So I could try to just taking that one going the other way. Actually, well, I don't think that I will be so lucky. But if they come back over here again, I might want to take that one. So I don't know. Let's see what happens here. It's a really good chance that they just bust through here, right? Given the liquidity and the situation and everything, we shouldn't rule out the possibility that this entire bull move completely retraces and unwinds, right? I have to say that's a pretty gutsy call for me to just straight up trade on it up there and expect it to come all the way back. We'll see. Like the liquidity really there to 8.5. The question is, do they slide all the way back to 05 real quick is a possibility. You're already done because you're taking such a teeny tiny little profit, huh? Okay, so that was a significant pullback. I'm actually kind of like the way that I got filled, though. It's just the way that the move played out. I'm not. Makes me a little unsure what it's actually going to do next. Makes me a little unsure what it's actually going to do next. S&P 500 did, in fact, come back there. Because I was kind of... I don't want to be like, oh, I called that one, but... Can you guys see how the caution that I've been having here on these moves today is warranted, even though it looks like we're getting really good trends and stuff? Yeah. This is a difficult market. Okay, Saudi Arabia in talks to price its oil sales to China in yuan, says sources from the Wall Street Journal. Tweets Walter Bloomberg, retweeted by FX Macro. That is not. That is. Okay, I would love to know what those sources are. What sources does the Wall Street Journal have? Is it people familiar with the matter? If it's people familiar with the matter, I'm not as concerned actually, because that might just be China trying to like rattle Joe Biden. Or sorry, it might just be Saudi Arabia trying to rattle Joe Biden. Okay, so that's interesting. I saw some pretty significant volume come through there on the micro 10, buying at 2.1001. That there might have been, given that 10 was kind of a key price that we kind of rotated around a bit, might have been somebody, like stopping out. So I'm not too sure about that one. We're still rotating through in the liquidity hole. S&P 500 taking a little bit further of a dive there. Hmm. There is a lot happening here, guys. I'm going to scratch this. This is very interesting. I'm not quite sure what to think about all of this. So, the thing that was going through my mind here was the S&P 500 is falling. And that news is kind of was not an all at once. It was kind of it trickled out to the markets. Like the people that I saw, I did not see the news squawks tweeting it first. I actually saw more individual traders on Twitter tweeting it, and then the news squawks picking it up. So that news was disseminated to the market in a diffused way. So now I'm looking at the S&P 500 and I'm thinking, okay, is the S&P 500 falling because of that story? And if that is the case, might you see some flight to safety in the treasuries? And so that's why I decided to bail. All in all, having gotten 7 favorable ticks and then just only 2 favorable adverse ticks and having to scratch it, it was a fairly good trade, even though it didn't go right. It didn't cost me anything. It was actually a good trade. And I read the volume and the liquidity or really, really well in order to get a good spot on that one as well. So it really was a good trade. And quite frankly, if it is the news that causes us to keep going here, then that makes it even better of a trick, because it just means that probably it would have, all other things being equal, maybe it would have turned out. It's just a piece of news came out, right? The thing is I'm not really seeing the dollar move on this one. Let's talk about this in general in news. Here's this news story. You know what? I tell you what, that news story, it is not going to look good for Joe Biden. It is not. They start. I mean, if it's only for China and they're doing it, I mean, I wouldn't say that it's like the end of the world, but it's a harrowing, a very concerning sign, The UN Secretary General warns nuclear war within. Yeah, that was, they said that like 2 days ago, I think, Lafta. But I think that one was kind of more like, that was kind of more them saying like, it's kind of crazy to think that we're sitting here in a situation where a nuclear war is even a possibility. I don't think that it's really a tradable headline. Here, the 09.5 is still an okay place to be in at. But, well, okay. ES maybe giving a sign that it wants to try and pivot again, and we'll see if we move beyond this. Do I look pale today? It might just be the camera set up somehow. Let's see. Do I have things all set up correctly? Now 160 f4 ISO 500 5500K. Yeah, I do have DRO on. I might want to turn that off, but oh, you know what? If I come over here, yeah, might need to adjust my LUT. That's what the LUT on kind of increasing the contrast, and this is what the camera just gives you base. Yeah. Looks better with the contrast, right? Oh, you know what, Salim? You weren't here the other day when we talked about this. Yeah. So I went and got an allergy test, and I'm allergic to like everything. Like I was allergic to like everything that they tested me. I've have 1 or 2 spots that are actually like there's still a bump there. Like my body is still freaking out to it. Apparently, the thing that I was most allergic to was a Russian thistle, which is like tumbleweeds, essentially. But yeah, everything that they tested me on, I was severely allergic to. You hate everything, yeah. So the past few days, I've been taking like Claritin. So I don't know what that does for you. But yeah, if I come over here and I'll make myself look full. I mean, I know that a lot of you are probably sitting here thinking, okay, one guy in chat says something about your health and like, why are you giving it so much attention? But how we're feeling is going to have a big impact on our trading, right? Although I'd have to say I'm doing really good today, even though I'm missing kind of the bigger trade, right? When I look at myself here right now, I don't see anything off with my skin. My eyes look pretty good right now, actually. This one is a little bloodshot, but it's always like that, right? My eyes, like under my eyes don't look good. So that kind of, I think, is more to do with daylight savings time, right? My lips too. Oh, my lips are a little chapped right now. That might be what's going on with that. I need to learn more about Claritin and the effects that it has on you, right? What happens when you reduce your histamines? Because you would think that if my allergic reactions are less and I'm having like some degree of allergic reaction all the time, that a Claritin should make me look and feel better, right? But you're probably if there is anything with me today, it's daylight savings time. Okay, so the E-mini did pull out a little bit of an upside action here. It's certainly not like back up to the highs. In fact, it could just be a bull trap at the moment. The treasuries did move down a little bit. Well, I had biscuits and gravy for breakfast. I'm looking at this though. I do think that I want to redo my LUT. I think that when I did the LUT originally, that I wasn't at the same ISO and everything, so I might be able to get a slightly better image. So we're back to 09.5. I don't know. So now this kind of becomes more of a classic price action setup in the treasury, which I always get a little bit nervous about, because I know that on its own is not a very indicative thing. I think that what we're fighting here is like we're seeing some mean reversion causing the rally in the treasuries. There might be some risk off causing some rallying in the treasuries. There'd be a reason to go long interest rates just because of the Federal Reserve meeting tomorrow and everything. So while I do think that it could be possible for us to pull out 10 from 09.5 to 10.5, I think that I got in and out at one of the best spots, and right now does not look like a very what is the word? It just does not get me, I'm not looking at this like, oh, I really want to buy it. Not seeing that. So let's come here and take a break a little bit and try and fix and do our lot here. Yeah. Okay. Come back to our main scene here. We may, I mean, we still got plenty of time, so we may yet take a trade, but I need to let this develop. They're still kind of stuck in this liquidity hole. How do I going to do this? Let's start by just pulling out the image. We'll do it in Paint. Paint is one of those, paint.net is one of those, applications that like they update it too often. You ever get that? It's like every time you open the application, it wants to update, and you're like, I don't want to update it every time I open it, guys. I don't want that red line around it, so I'll just take the inside of this here. You say it's better now, huh? I took the lot off. Dun, dun, dun. Okay. I look so happy. It's okay, it doesn't matter. It doesn't matter. It's for the image processing. It's not for you guys to look at and think that I'm such a happy, good-looking guy. So I'll make this make into lot 4. Okay. Save. I don't wonder if a PNG is actually the best way to do it, but Trading Floor Audio tweets, list of bear markets grow as global stocks erase 12 trillion, reports Bloomberg. NASDAQ 100 joined indexes in China and Europe in bear territory. 12 trillion in value was wiped from the MSCI AC World Index in 2022. Well, Treasuries is kind of pushing a little bit higher. I kind of think we're glad that we decided not to take the mean reversion trade. On the split side, could we have gone short 10? Maybe. I don't know if I would have gotten 10 at any point, but oh no, I actually would have when I was in the trade. But the problem is still, I don't know how far below 09 they can get. So let's just kind of wait here. That does seem to be a development that should make it easier for us, but easier for us to try and go short rates. But I mean, that looks like that's a much more solid trend at the very least. S&P 500 bull run is getting quite a bit better looking. They have busted the ATR stop on both sides. Oh, geez. Okay. So have you guys seen this thing from the CME about daily options? So it's like an option and you can that expire every day. So basically you can bet on whether we're going to end the day up or down. Ugh. I don't think that they're just necessarily binary though, right? I think that you still have to pick your prices. So I'm kind of suspect that it's going to be one of those things where like you're going to lose most of the time if you're buying them. Man, DaVinci is taking a long time to load. It looks like it is moving now. Archive is hiring. That's interesting. Okay, let's just make a blank new project here. That's coming back again really hard. I don't know, guys. And look at the dollar. So the dollar is coming the way that I think it should. Well, not the way that I think it should, but rather the direction we would expect based on the China Saudi Arabia news. Yeah, of course, DaVinci is another one of those that like every time you open it, they want to update, and you're like, what the heck, dude? Media pool. So let's go find our picture. I think it's taking so long to load because, you know, I'm already using a lot of memory, but I think we should be good. How are we doing on stats here? We've dropped a few frames. I'll keep an eye on that. Okay. Now we can go and color it. And what I would like to see, not the left. I do think I can bring the lift down just a tad. Nope, actually no. But I can bring the gain up quite a bit there, right? Oh, actually, let's reset this first. Let's have this node just be color correction. Did it? Yeah, color corrected it just a tad. Okay, and then add serial node, and then we'll do the gain to this one. Get that white. And then the gray card. The gray card is okay. I could maybe bring the gamut down. I could also bring it up and make it lighter, but I think it's better. I think it's better right there in the middle where it was. Just taking the dynamic range out of it and making it brighter. I think that's pretty good. Okay. And then generate LUT. And I do a 65-point cube. I think is what I've been doing. Let's see here. Let's just do safe. I don't think I saved it properly. It's my son turning the lights on and off. Hold on a second. Was it for the thumbnail? What do you mean? That's it right there. Oh, wait, that's it. That's the one that I want. There we go. That's way better, don't you think? Okay. It doesn't look like we missed much. It's still stuck in that hole there. The S&P 500 can't seem to break a new high though. That's in my mind that was like forever, but that was only like 10 minutes. Yeah, I did that all live. Say hello. Oh, let me hold your feet. Let me hold your feet. Say hello. Hello. Look at the camera so they can see your adorable face. There you go. I should just stream my puppy. I should just play with my puppy and stream it, and that would be the thing, right? That can be my thing. I love this dog. You know what though? I have a problem. I'm allergic to dogs apparently. Even though I don't think that I could. You don't break him, Seth, dude. He's a very fragile dog. We're being very careful. Mommy closed the door on him yesterday, but I think he's okay. And back to 09.5 again, very easily. Yeah, why are you a cat? Why are you cleaning your paws? What are you doing here? Anyways, I think I'm allergic to dogs. Oh, he's still got a little bit of a cold. Apparently, did you see him sneeze there? But he wants to sleep in the bed. You know, he was like, I put him in the kennel. My wife wakes him up, or he starts whining in the middle of the night to pee. So my wife gets him out, and then she puts him back in the bed. So I'm allergic to him and they're sleeping in the bed. I don't know what we do about this, but we've got to get him to sleeping all night in the kennel, probably. Pork chop. No, his name's not. One of the problems that I'm having is that I'm the only one that really wants to play or train with him for some reason. The kids don't really play with him too much, which I think is silly. When I was a kid, I would love to play with a puppy like this. But I guess I'm an adult and I love to. Oh, there he's crying. He's going to cry to get out. We're going to have to ignore him. I know. Well, I don't think that, I don't notice any kind of allergic reaction, but when they did the test, they said that it was a reaction. I don't know. I'm kind of wonder about the accuracy of the test, but it might overstate the, well, not overstate, but you being allergic to something on the test doesn't necessarily mean that it's really affecting you, right? Hmm. So the way this is playing right now, I think typically does tend to lead to a reversal, but I don't know if I can be too confident taking it here. What do you feed him? I feed him food, dog food. Hmm. So one thing I am noticing is that the 30-year does appear to be a little bit more aggressive than the others. Notice that the 30-year is up 2 ticks while the 5 and the 10 are flat. So if we did want to take a trade on a reversal here, the 10-year may not be the best place to play it. It might be better to try and do it in the 2 and the 5. But the liquidity in the 2 and the 5, not very good for the micros, so I don't know if that one makes sense for me. So the question then is what I would still really like to do it in the 10-year. I think that we could sort it out, but it just kind of means that the potential reward for us might be a little bit less, right? Unless we continue to see some steepening. Or rather, the steepening that we've been seeing comes back into play. Mesh22, hello, how are you today? Okay, well, there was a significant little push back to the low end of this range. I have to say, it's really hard. Well, I'll tell you what, we will put one. It's a little difficult to really read the volume, though, just because the liquidity is so light. It's just really easy for it to move, right? Hmm. S&P 500 kind of looking maybe to roll over again. Let's do a little bit of reading around, huh? And let's see here. Okay, so they have the story about the Saudi Arabia titled Petrodollar Cracks. U.S. producer prices soar at double digits for the first time, even though it was less than expected. Okay, what's the chart at the top left of the screen? That is what we call a Vista chart. And it is the colors that you see, the green is showing you how much liquidity is at that location. So that bright green is spots where there are large orders being placed. Now it's not as useful right now as it normally would be because there is just not a lot of liquidity in the markets. So, what would normally be like the average amount of liquidity at each price ends up being like a big a big order that shows up. So, well, the 10-year does kind of look like it's rolling over. S&P 500 having another rotation here. What are you saying? When I make a barbecue, I never thought cats would freak out so much about raw lung pieces they rip each other's faces for. It makes me wonder. Oh, okay. Okay, that's a little weird, dude. That's a little weird, dude. Hmm. Okay. So when I read the zero hedge story, I'm like, wow, they wrote a pretty long story pretty quickly. Well, even though we've come down to the lower end of that range and they did so a little aggressively, you can still kind of see this situation where there's more buyers down here. There's liquidity below it isn't really pulling very much. Like they want the fills. So it is going to take some market orders for them to push through there. If I start seeing them hit into it though, that might be a good reason for me to try and catch the edge over here though. Not quite how I wanted it to be done. Okay, so there was a little bit of a pushback, but you can see some market orders still coming in at 09, pushing it back down. And the 5-year is starting to make it, is starting to shove here. It was just a really random thought that I don't think that most people wanted to be thinking about, you know? And it's a little bit more like it. They're still going to have to hit into these '08 halves and '08s probably. Hmm. It's still selling it down there at '09. Wow. That was pretty aggressive right there. Five-year down ticks. Okay, so they filled the guys at '08 half. Did you see that? $12.99. Like I said, those guys probably aren't going to pull. They've been there for a while because it's the edge. Because it's the edge of the liquidity hole. The market sellers are going to have to cross over, but they're definitely out there, right? Once you get '08 to crack, because '08 is the VWAP, right? Hmm. Seeing some headlines from the squawks about South Korean beef sales, and I'm like, oh, okay, whatever. Not sure why that's a significant headline for you guys, but okay. Okay, so there's them crossing over at '08. Now the bid at '08 is kind of reloading. It might take, if they actually clear that price, it might take a little bit more volume. Like I think that it's probably going to be like 2 or 3K. The 30-year ticked down 2, so we're starting to get steepening again. 30-year could lead us lower. Like the 30-year is at its VWAP too. Okay, so they all just traded down from the VWAP. So now that they've kind of come down from there, they should be able to trade a little bit more freely. There's a reasonably large order there at '07. Hmm. They're kind of doing hop and skips here. S&P 500 kind of approaching those highs again. That really looks like an ascending triangle. Maybe we should reset here again. I think I'm more tired than I realize. I think the daylight savings time is probably hitting me a little bit more than I realized because I was just kind of zoning out there for a second. Yeah, really focused in on the action, and sometimes that can make me feel sleepy. There, E-mini awfully close to a new regular session high, but not going just yet. Five-year definitely trading a bit there. Okay, so that was a really significant uptick at 07.5. So something that I think will be important here now is how much liquidity stacks behind us now at like the 08 and 08 half now. Because it took quite a bit of volume to come through it. See there, uptick at 1,000. Okay, but not holding. Right? Because I think what we would maybe be a little bit worried about is they're being pulled back into the vacuum above us, essentially. Hmm. Almost there in ES. They seem to be gearing up for it. I think we might see a glorious stop run if they break up to new highs here. A little bit of absorption at 07 area, though. There you go. Yeah. Oh, that was really satisfying. That was a really satisfying stop run, man. The 5-year down 2 ticks. The 10-year is lagging here in this situation. Probably because the 10-year has a bigger liquidity problem than the other two, relatively speaking. It might like break hard and catch up, but right now there's a little bit better. The buy side liquidity at 06 half and 06 seems a little bit better than the sell side liquidity at 07 half. There's a good down tick. Kind of. That one's just catching up. There we go. Then you might have at least one more down tick in it to kind of equalize out. You're getting decent amounts of volume trading both sides in now that we're back to 06 half now though. But you kind of got to consider if we trade right through the VWAP like that, right? This is turning much more into a reversal. You know, a lot more people are looking at this as a reversal now, okay? And how's E-mini doing? 42.17. Oh, that's looking awfully strong right now. I have to come back to the volume profile and look at ES and see if I can sort out any kind of well, there was the close on Friday up at 42.50 might be where they eventually get to today if we really have a strong bullish day. No, but none of that's really going to help us too much. Or probably what we need to do is come over here to Trading View and look at our VIX estimation based on the VIX. Excuse me. Nice trade, thank you. I'm really happy with my trading today, right? I was pretty cautious about it. And, oh, it looks like JJN has come all the way back here. Maybe the nickel market will cool off when it opens back up on Wednesday. Which is sad. I would prefer to see that guy get screwed. Okay, we don't need the moving average. Well, the treasuries really collapsed there, didn't they? Okay, so on the upside, I got 42.33 is the first step. 74 is well above where I was looking. It's possible target. So let's say 35 first, though. 35 first would be the spot. I don't know if 35 is going to be where we're going to get to before we end here. I took the $20 there. Good deal. Wait, why did they? Sorry, I got like way ahead of you. Okay, so what was the trade based on? When I was looking in here, you know, there has been some risk off sentiment in the markets, of course, but it kind of seemed to me like the initial drive had a lot more to do with mean reversion. And I knew that given the liquidity situation, that it was really likely that you could have like a really strong move up and a really strong move back down. So I think that the primary thing was making a read on the liquidity here. But then you also just have to keep in mind that there's a lot of people going to want to hedge themselves for this FOMC meeting. It may actually be the case. I'm really concerned about that we're setting ourselves up for like a a buy the rumors, sell the news sort of a situation in the treasuries for tomorrow's FOMC, where rates increase quite a bit going into FOMC, but then when the announcement actually comes out, if there's not any surprise in the announcement, we may actually see yields decline a little bit from there. Because I am kind of wondering if 8 or 9 interest rate increases is really makes sense at the time. I haven't heard enough from the Federal Reserve as of late to know how realistic of a possibility that is, right? Now, once Powell starts speaking, then like all bets are off, right? But I think that we could make some sort of a trade based on like being long rates into the FOMC. Maybe you get a spike on the announcement and then you want to sell it and get out, right? So that was kind of what I was playing, and I could just see the volume starting to turn around. So that there was the confirmation that I needed based on, the information that I had that had a slight possibility of predicting overflow. I think in this situation, the information that I had was not super strong, so it was quite a bit of a gamble. But I was able to read the liquidity really, really well, and so I felt pretty confident about taking the reversal in that situation, simply because I thought that I could get a good spot and that I didn't have to worry so much about, really getting screwed. So that's how that I went. And Steffa, how are you doing? Welcome back. Anyways, I don't remember what it was you were maybe saying about why did they, but yep, I got my paid my commissions too. So yeah, I'm pretty happy about it. That's still $40 off of where I would like to be, but hey, we do what we can do. Now, one of the things is I kind of would like to see this go further. I mean, I don't know. I like seeing rates rising. I feel like rates have been low for too long. I think that I have this deeper hidden bias that I think rates should be higher, But I took that one off because once I get about $20 to $25, that's usually as far as the move goes. That might not be an appropriate target in this situation because we really are seeing a lot of volatility. But the because of the volatility and everything else, I just really don't think that this is the situation where I really want to push it, So let's just kind of see. If they break the low, I'm probably going to feel a little bad, like it could have had another $10, but I'm not going to stress about it too much because we only got 20 minutes left, right? But just kind of reading the liquidity, you can kind of see like through here, right? It's like the buy side liquidity is like non-existent now all of a sudden. And you're not seeing it in these two either. So, oh, look, there's a little clown face. You like my clown face? Ah, ha, ha, ha. Okay. Now, I'm sure that a lot of this has to do also with the S&P 500 taking off to 4220. And so again, kind of our upside target there, I think, has to be 4235, but that seems like quite a ways off. And I do question the ability for them to really continue, really just keep going here. They're going to have to probably pause a little bit and do a bit of a pullback right now, which might give the treasuries a little bit of a reprieve. Yeah, I bet you're doing really well with that MES trade. I mean, I don't know. I wonder, so is today the kind of day where you can just hold it all day? I don't know. Like one of the problems I have in equities here is that whenever equities start to get bullish, I'm like, why? Why? Okay, you're bullish. Why? You think that the Ukraine deal is going well? Why do you think that? I'm starting to wonder if it really isn't Ukraine bullishness or optimism or anything like that. That's just like the best excuse that we can find to explain like share buybacks and stuff, you know? You know what I'm saying? Yes, yes, I know what you are saying. Hmm. Okay, a little bit more liquidity traded at O2, and the offers look pretty healthy here. So I might have gotten out just a tinge too early, but this is kind of creating the sort of area where you might want to think about taking off profits, right? Because in order for it to make another push lower, we're really going to have to get some really aggressive sellers. Well, 3K at O2. All that matters is that it feeds you money. Well, today it gave some, tomorrow it might take it away, you know? Okay, so since O2 went bid again, I want to reset right there. By the way, on the equity indexes, here's something that's kind of interesting to me. Um, well, here, I'll show you guys. Come over to the charts. Do you see the two data series down at the bottom? So the first one is a spread with NQ, and the one below that is a spread with RTY. So if I recall the way that I got the spread set up and everything correctly, that means that NQ is falling relative to the S&P 500, and RTY is increasing relative to the S&P 500. So it's curious to me. Nasdaq is the laggard here, but the thing is that when we've had like Nasdaq doing poorly, we've also had small caps doing poorly, but that's not what we're seeing today. It seems like the big tech growth names are still kind of lagging, but the small cap, smaller businesses, let's say, a lot of those are still growth names, but those appear to be doing a lot better today. Now, on a relative basis, I don't know. RTY has definitely had its struggles this week, right? But that might be kind of the way that the indexes go here might be a key tell about what kind of an economic environment we're really looking at in the future, you know? Man. Gold nears 1900. Yeah, gold just keeps getting slaughtered today. Silver not as bad, but gold is just ugly. Like, look at this, man. Like, money came in because of the whole Ukraine situation. It's just like perfectly reverses that back to 1900. Well, I don't know. What you might see is them build the base at 1900 and come back up, but we'll see. I think that to be in gold, I think that not to be in gold, I mean, that can be a part of a well-balanced portfolio, okay? But I think that if you were going to be bullish gold and silver, I think that the call you'd have to be making is that either inflation continues and the Federal Reserve continues to, be late or off, and that real yields don't keep up, or that there really is like a recession coming in and some more currency debasement, But it's awfully hard to trade this thing because it's like it reacts so much more strongly to the yields than anything else. So. Okay, yeah. So we are getting kind of this little liquid hole. I called that really well. Like there could be another leg, There could be another leg for sure. I could have made another $5 or so, but I got the timing right. I didn't have to sit through very much heat in it at all, and it just went my way. That when I get one like that, I kind of wonder, like, was somebody watching out for me on that one? So if there was, I appreciate it. And like, well, let's wait for Seth to get on. We need to throw him a bone every once in a while. Wait for Seth to go on. Okay, Seth's on. Now you can move it. I appreciate it. Hopefully the rest of the week is as kind. So that move yesterday, man, whew. That one made me feel like I missed out for sure. I don't consider myself a FOMO type, but when you see a move like that and you didn't make any money on it, you can't help but feel kind of like, would have, could have, should have. I like it when it's just one trade and that's it. Yeah, I don't know, NASDAQ killer. I don't like that about myself. I mean, that's what I do. But I don't think it's the right thing necessarily. I think in this situation, I'm doing the right thing because we're just really, again, liquidity is really poor. We've got an FOMC tomorrow. We've got volatility that's really high. It's going to be hard to make really good reads in this environment. You can see how they had come down 2 ticks there, and now they're right back to 0.2. So this is giving you all sorts of fake starts and things like that. I think that it's smart for me to play it conservatively, right? But I think that I really do need to get into, there's these days where I could probably make multiple solid good trades and I just don't. And the issue is that, like, if I'm having a losing day, I'll try over and over and over again. And so your losing days end up being bigger than your winning days. And that's not what we want, right? So I do think we need to identify more times that we are doing well and push it. I think that when I'm doing well, I don't give myself enough credit, I think that I just kind of think, well, overall trading is hard and I've had difficulty. And so when I am catching a little bit of something, I need to push it harder. One of the problems I've had is that when I think that it's time for me to push it, then it's like I'm on the wrong side. And then I end up taking a bigger loss than expected. So I think that is probably the largest thing that I, on like a personal level that I need to sort out amongst myself is understanding better when I have a hot hand. I think I had a little bit of a hot hand today, but because both of the 2 entries that I took were pretty good, right? Even though the first one didn't work out, then the trade came and they gave me another chance, and that one did work out. I think I do have a high hand. I'm just, I don't think that there's really that much opportunity in this market today. So, probably a lot of luck involved in that trade too. Well, I don't know. I gotta say, this thing, just remember, and move this down. Markets are inelastic. Okay. Liquidity is affected very strongly by my orders. We have such light liquidity and you have a move up like that, it makes it really easy to come back. It makes it really, really easy to come back. And how far it comes back is just a function of how many orders there are out there. You see there, they went from -5 to -18. And now that it's reverting back up, like that just kind of shows you how many orders are available out there. And we just kind of keep track of that. And I think that we got what we needed. But, well, I got to tell you that when you read the inelastic market hypothesis, you kind of sit down and you're like, okay, that's really great for the scholarly wonks and everything, but I don't know if this is really like a trading theory, right? But the further along I go on this, and the more that I think about it, the more that I realize that it really truly is. And not only that, but that it really well explains the majority of things that we see. And in particular, why trading is just so hard. Why retail trading strategies seem to do so poorly. Because almost every retail trading strategy has some element of or assumption of price elasticity built into it, right? There's this assumption that there's a price that's too high, there's a price that's too low, right? Like, think about auction theory. Auction theory is a great example because I think that auction theory really was developed by people that are watching the market and watching order flow, quite frankly, and we're trying to make a theory about how things move. I think that it really was more a theory about like where it moves on an intraday basis. So all of this stuff about where value is and everything else like that doesn't really make sense. But it was, they would see that, hey, you would get a trend, it would move up. Why is that? Right? Well, in auction theory, they say this is like a range extension testing the end of the range, and then they see if the market accepts it, and if it doesn't, it comes back, right? But that's not what actually happens. That's not what actually happens. What actually happens is there are large meta orders that come into the market, and if a large meta order, and it could be absolutely no reason whatsoever, no informational content behind it, it's just rebalancing or whatever, that can move us really strongly up, right? And it's going to keep moving up until the number of orders that they have is done. And so, like, where it pivoted last, what the higher low of the day is, where the VWAP is, all of these, they don't matter. VWAP kind of matters a little bit, but you can see we blew through that VWAP, right? Anybody looking for the VWAP bounce on that trade got screwed, right? The thing that determines how far it goes is how many orders there are and the liquidity, right? Because of this situation, the liquidity behind us wasn't very good. The liquidity was behind. I was actually, once we got through, remember I was saying like somewhere around here, like 07, 06, 06, half 06. I was like, okay, yeah, that's okay. There's a little bit more trading there, but it does look like they're getting through that. From there to here, it was like there was nothing. It was surprised me a little bit how quickly it came back, right? Well, that's what causes it to move. Now, if you come in with this idea in your head that like, okay, there's a price that's too high and there's a price that's too low. Let me set my price that's too high based on the previous high, right? Okay, well, if you set that, you're definitely going to get stopped out. So then they come up with this theory that like, oh, well, they like to stop out because that's where the liquidity is. So what I actually want to see is I want to see them stop out, and then I want to take the reversal on it. But you're still using elasticity, right? You're still using this idea that there's a price that when it's going to be too high, there's going to be less buyers up there. And that's not the way that the market actually works. The way that the market works is that there's new orders that are going to come and they're going to keep pushing it until that order flow stops. So none of those like previous highs or lows matter at all. What matters is what the meta orders are, how big they are. In this situation, we were able to sort something out. I think we got a little lucky, but hey, there is a meta order trading on the mean reversion. There's a meta order trading on, there's an FOMC tomorrow. There's a meta order out there trading risk off, I think, to some extent. When we started to see the risk off meta orders start to stumble, that's when we started to take it, and worked out really well. So, I don't know. When I make a good trade, then I come and pontificate. But I really feel that if you guys start to study market elasticity and start to watch markets from that perspective, I'm not going to guarantee that you can make money, but I think you're going to have a much easier time understanding what's going on. And I do think that if you guys stick with it, and you really seek to understand what's going on in the marketplace and how the market actually behaves, that you can have some success. So, or at the very least, break even and be able to continue to trade, right? Remind me, who is KBJ? Don't know who that is. Just going to ignore it. Just look, the world is disintegrating under your eyes and ES is buying, but you made $22 because of that, fat man. Hey, ES, remember when we were saying 42.20, probably ES needs to pull back if they're going to make another push. Yeah, well, guess what? They did. So we called those turns pretty well. I can kind of see, like, it's there's another interesting thing is, like people have always said there's kind of like a tempo to the markets, and sometimes you just get off tempo. And like, how do you get on tempo? And I've been looking a lot at market cycle indicators. There's definitely like a cycle to it that like the buys come in waves and the sells come in waves and stuff. And that kind of causes this movement, right? But just based on the price movement, it's really hard to sort those waves out. But I'm starting to think that if we really truly understand the liquidity position situation and the meta orders, that we can sort those out, because I've been able to call swings, within 2 ticks or so in treasuries quite accurately as of late. I mean, when I do try and call them, I seem to catch a good move. I might not necessarily know what the next swing is going to do, if it's going to be up or down, but I'm able to kind of call the spot, whereas kind of have to chill out, which makes things a lot better for us in terms of trying to sort out when we need to take profits, right? I would really, really like to let some of these run more, but maybe when I see that stuff, I should just always get out. And that probably means that my winners are probably going to be 10, 20 bucks most of the time, right? You think retail traders can ever be a millionaire by trading? I think it's the wrong question, right? I mean, sure, it's possible. Sure, it's possible. But if you want to be a millionaire, day trading is probably not the way to go about it. I'm still thinking that the goal for us should be to become a fund manager. This seems a little crazy, but I think that I'm further along than I give myself credit for. Sometimes. I certainly find I hate this kind of feeling like I'm smarter than everybody else. There must be something wrong. Like that's a little egotistical. But man, every time that I end up talking to retail traders outside of this stream, that's what's going through my head. These guys have no effing clue what they're even talking about. And it always goes the same way. It's like I start telling them stuff, they reject it. I explain why that's wrong. And then like they will reveal how they don't know anything, Like they'll always say something that really reveals how clueless they are. Like one of the things that was happening the other day on Reddit was they were saying, well, okay, so if this is research, why should I care about like what some researchers are getting, because they're not actually trading it. But it's like, actually these are some of the top performers in the field. Like a lot of these guys, they'll do research, get hired by a firm or start their own firm, and then still continue to publish studies. Like that's what Jean-Philippe does, right? Yeah, maybe you should look up the names of the people that did the study before you badmouth them, right? It's just like stuff like that every freaking day. But you know what? At the same time, I couldn't manage a fund today, right? There's a lot I got to learn, but I think I know what I need to learn, and I think we should start working on that too. Like I said, I have like a trillion things that I need to do. Probably not enough time to do it. I don't know. I think though I have to change my priorities up a little bit this week. We'll see. Tomorrow though, FOMC, that's the next thing. That's what should be on our minds, right? FOMC day tomorrow. I'm not planning on taking much risk for it because I'm betting you that tomorrow is just going to be a really crazy day. But we can come back and kind of, survey the rubble afterwards, right? So I'll see you guys tomorrow. In the meantime, stay profitable, friends.